All right, let's have some fun with charts. And by the way, the hook for this week, if you and a couple of your buddies all went, it's more than just buddies, but if everybody in a stadium, let's say, goes to one bar to drink and have shots, well, how many shots do you think that team can actually consume? The fans of that team can consume. There's an answer at the end of this, and it is freaking mind blowing. It's unhealthy, in fact. But let's get to the charts. The fun with charts today, guys. Tomorrow, we're going to find out more of the big market movers. But for rates, just so you guys know, rates are still in the high. They're still in the high sixes, right? So this is low 7.2. This is from, I think, Investopedia. This one's the Mortgage News Daily and Freddie Mac. You guys can see for the month of June, they've basically gone sideways until today. Today's the biggest move we've seen in June. The rest of the time, since literally the end of May, we've just been going sideways. What's the big drop today? Job reports that basically it shows that supposedly there's fewer jobless claims that are coming out. Well, part of that's because when they took the reading, this is when the week of Juneteenth. So there was only 4 days. So it looks like it's a stronger labor market than it is, but the market's responding and it doesn't like that. And that's this big red candle over here today, which is Thursday. Tomorrow is going to be the big market mover with the PCE. So this is the Fed's favorite measure of inflation. You guys can see the little squiggly line. The blue lines are recessions, but you guys can see the squiggly black line, and it has been coming down. You can see how far away we are from the Fed target, which is why they say they're going to continue to raise rates, but we're at least coming down. That is good. Tomorrow, we could see a movement. It'll depend, but the headline number could go from current 4.4 down to 4%. That'd be huge if that actually happens. That would be good for mortgages. That'd be good for mortgage rates. Because again, inflation is the enemy of our 30-year fixed mortgage that we give out. So the lower inflation, the more valuable those become, which makes our rates go down. So that would be good. A couple of things that I did find interesting for as far as like last week, if you guys remember, we talked about how just there's this huge wave of millennials that are growing up and are going to be home buyers in the near future. Check out the home investors, right? Look at the red, and you can see just how as of the last handful of quarters, the last 3 quarters, investors have basically stopped buying as much because of the rates. Interest rates make it to where it's hard to find cash flow on a property. And look at the spike after COVID. Holy smokes. You can just see the percentage of investors that grew. So I just thought this was interesting. Appreciation, guys, there was some news out there. We kind of called it that you may see these headlines if they show them saying like houses that appreciate, the median home price is going down. Guys, that's not home prices. Median just means that, and I'll show you in a second what that means, but check this out. So Case-Shiller and FHFA, these are their measurements for home appreciation. The biggest thing you need to take away without getting lost in these numbers, Case-Shiller is all purchases. FHFA is only purchases with Fannie Mae and Freddie Mac, like conforming loans. So in other words, Case-Shiller is going to be a little weaker. The numbers look a little weaker because its cash offers are considered in there, and you maybe get a little better offer or better price when you pay cash. So for homes that are financed, that's FHFA. And guys, from the peak of June of 2022, when house prices peaked, right now we're actually up 1.6%. Year over year, we're up 3%. Last year, by the way, the first part of last year, 2022, the first 6 months, get this, it was 9% appreciation. That was the pace for an 18% year. We had already seen 9% appreciation in the first 6 months of last year. The second 6 months last year, minus 3%. So the net was a positive 6%. This year, they're forecasting 7% increase. So prices are still going up. I feel like a broken record. I don't feel like enough people out there believe us. So if you're watching this and you're in the building community, your real estate community, tell people these numbers, show them this for the video, right? So here's more numbers just showing the month over month changes. But guys, when you see the median home price, it's not appreciation. So the example here, this top row, you can see home one, there's 5 homes for sale. And if we look at 253, 354, the average home is 300,000, which is coincidentally also the median, meaning the middle. So now if you go down to the bottom, the next yellow number, the reason why if there's only 3 homes that have sold, even though the prices are all more, so this is after a 6% appreciation, even though the 200 went to 212, the 250 went to 265, the 300 went to 318, because there's less homes being sold today because inventory is so tight, the middle number from the 318 to the 212 is 265. So the median home price went down. but values went up. So do not confuse this. When you see this, make sure your customers understand the difference. I know it's not normal lingo to say the median home price for people. It's like they just assume it's appreciation. It is not. This is powerful. Share it with them, because here in this example, the median home price went down 13%, but the appreciation change was actually a +6. So things are continuing to get more expensive. This is more new home sales. Look, it's just basically saying there's not a lot of homes for sales out there. It's just not happening. So keep building builders, keep going. We need them. Median home price 416. This was interesting. Beyonce apparently is blamed for her own Swedish inflation because she held a concert in Stockholm because of all the people that, the money that flowed in to see her perform and all this stuff. I guess it's 50,000 people. She created her own spike in Swedish inflation for that time period, which I thought was awesome. Good for you, B. Lastly, guys, here's College World Series. If you don't watch it, this year was fabulous. I'm not an LSU guy, truth be told. I'm sorry, Tigers out there. I don't like LSU. I typically root against them. I'm usually anti whoever they're playing. I'm pro other team. However, this year, a bunch of characters. They came from the losers brackets. Some of the truly the best college baseball game I ever saw. They won it. It was an awesome thing. But look on the right. So the screenshot on the right, apparently there's a bar in Omaha, which is where the College World Series is held. And they track for Jello shots for $5 what school is represented. Check out Florida, 4,000 people. TCU fans, go Frogs, 7,000. Wake Forest, 7. Go down to LSU, 68,000. That is insane. So Tiger fans, congratulations. You travel well. If you're watching this by now, or if you don't know this by now, please share, subscribe, like, forward, all that fun stuff. Here's, you can scan the QR code. You can go to the normal platforms. But as always, guys, thanks for watching. And please share this with your folks and let people know that it is a good time to buy. Houses are going to keep getting more and more expensive. Thank you. Have a great week. And by the way, happy 4th of July next week. We won't talk to you before then, I'm sure. Bye-bye.